following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Welcome back to NinjaTrader Live. I'll be your host for this segment. I'm Tom Schneider, CMT with NinjaTrader, and this is Traders Workshop, where we like to bring in our NinjaTrader ecosystem partners. Today is no different. We have a somewhat regular guest on. I enjoy talking to him. I hope as much as you enjoy watching him. It's Steve Rhodes from Mastering Probability. How you doing, Steve?
Doing great, Tom. Good to see you. Hope you had a nice holiday weekend.
I did. It was nice and relaxing. How about you?
Absolutely. Good to be back in the saddle, though.
You know what? It was a good reset, right? It was just the right amount of time to be off, and then you're, bright-tailed, or what is it? Bright-eyed and bushy-tailed on Tuesday morning, ready to face the day. And, I think these markets are challenging. I think it's not an easy time. So just to be, get a good night's sleep and start the day fresh is what was needed. So all good. But I want to talk to you because you were very generous with your time and helped us with bars closing.
Yes.
And we talked about some of the markets, end of day, what happened during the day, and how you looked at them. One of the things I think is interesting is how you identified tops and bottoms. And of course, we usually do a disclaimer at the beginning of the show. When we talk about technical analysis, I like to say past performance, not indicative of future results. We don't always get, the results that indicators sometimes indicate, right? It's a probability thing, bringing it back to your name of your company.
Indicators fail.
Right.
Exactly. Or patterns fail.
Patterns fail because we're fallible, right? Or humans are fallible. But I just wanted to see, can we look at today's markets like we've done in the past?
Yes.
But if you can explain kind of how you come to some of your reversal pattern indicators when you identify tops and bottoms.
Sure, absolutely. So if we take, this is the daily time frame cash index charts out here.
Excellent.
And the reason that I've got this is because I'm just trying to understand, at least on a daily basis, what's the larger pattern that is out here. So the Dow, for example, has been the weakest of the indices out here. And this is the daily time frame that we're looking at. And one of the patterns that I use is a 9-count pattern out there. And on that pattern, the high needs to come on bars 8, 9, or the bar following bar number 9. And that's exactly what happened in the Dow on May the 16th. And that generated a topping signal. I might have even, in an email, might have sent you, said, like, I'm getting topping signals. And this was as the market was rallying, even on that day when it was making a new all-time high. I just said, hey, look, I'm getting signals that we're about to see some type of market top. At that stage, and only because of these signals out here. In the case of the Dow, it's actually worked. And it has pulled back to the area where it had broken out from. And so the number for folks to watch today, or the number that I'll be watching today, is 38, 5, 18, 28. Now, most people would say, well, look, Steve, shouldn't price get back to fill this gap that is out here on the daily cash index? And I would say if price closed below 38, 5, 18, 28, the answer to that question is more likely yes, because this would be a key. When price pulls back to support, and we can use different things for support. I use this as one of the tools. And I do teach this to folks that if they're interested in learning this pattern and the other patterns that I'll speak about, they can go to masteringprobability.com and they can have a 30-day free trial. But it has a number of educational hour videos that show the different tools that I use, explain exactly. So there's no magic, there's no hocus pocus dominocus. It's about really being able to try to share with folks tools that help us to identify when there's a higher probability of a top or a bottom, not a guarantee. As you said, in this case here, we can see that it's working, and now it's getting right back to a support level, which, by the way, the market right now in just a few days' time has gotten into an extreme oversold condition. And how I would compute that, Tom, is I use the advanced decline oscillator for the New York Stock Exchange. And what that does is that takes a look at the advanced decline line, and an oscillator is simply the difference between two things. The two things that I use for that are the 39 and 19 period exponential moving average. And when that gets down to the minus 150 area, that's when the New York Stock Exchange is giving us an oversold reading. Now, right now we're at minus 187. When we get to minus 250, we get into the extreme oversold area. And the way that the oversold markets work, it's kind of like the idea if it's summer, we're getting to summertime, at least in Florida. We went to summer basically in a day. We went from winter to summer. There was no spring. 95 plus, you're outside the heat, you're getting heat stroke basically. So that indicator, it's kind of like picture yourself in a pool with one of those balls that you try to hold down with your feet, and you can hold it down for a while, but eventually you lose it, it pops up out of the water, and that's kind of how the oversold conditions end up getting worked off. So what I want people to understand is, would now be the good time if your inclination was to go short the market, would now be a good time to do it? My answer to that would be no. My answer, because we're in an oversold type market. And so I wouldn't be surprised to see the Dow at the end of the day hold this 38,518 level. Not a guarantee that it will.
Steve, let's just back up just 1 second. I want to explain the advanced decline line a little bit, because for those unfamiliar who are new to either futures trading or the stock market in general, this is a form, and this is something that I worked on in previous career. The advanced decline line is a form, and probably one of the oldest forms of market, what we call market breadth, and all it is measuring the number of companies or number of stocks in the index that are up for the day versus the number of stocks that are down for the day. And that's that difference that Steve is talking about. So when it's positive, that means there's more companies that are up on the day than there are down. And when it's negative, there are more stocks down for the day than up on the day. And that is an indication. One indication could be a bearish and bullishness. Now, some indices are weighted by market cap. Maybe it's not a true one-to-one relationship. But if the market tends to trend following how the components of the index are doing, then you would want to follow something like that, like the advanced decline line, because that can give us maybe a little insight as to where that index will go. It's like, the way I look at it, Steve, is you go to the doctor and he does she does a bunch of different tests on you, and takes a summation or takes an analysis of all those different tests and says, okay, you're healthy, or you got to work on this, right? And that's what market breadth is. It takes the health of all these different stocks and says, okay, overall the index is doing well or not doing well. And just wanted to clear that up, because Steve, you and I know the AD line for years. We followed it for years.
Yes.
But if somebody's new, the advanced decline line is something you can find for different indices. And I think New York Stock Exchange being kind of the gold standard of how to measure what the sentiment of the market is, using these calculations, and kind of use it as a proxy for other indices.
Yeah, I took a snapshot, and it's on the screen right now. People can take a look at it. And so the advanced decline line, if you kind of look back over here to, this is in 2021, is when the advanced decline line, based on my calculations, it hit a high. And that high was at this level. It's just a numeric number. It doesn't mean anything, folks. And it depends upon how much data it is that you're putting into the pattern. But what happened here was, just about a week ago or so, this is a daily time frame that I'm looking at, price got all the way back up. Didn't take out that high. I don't know if there's any meaning there or not, because I've never really used this tool in that way. Mm-hmm. And I instead really try to utilize, but the summation of this advanced decline data and using the 19 and 39 period exponential moving average is what creates that oscillator. And we can see that, I'm not showing price up top out here, but when this oscillator starts getting truly down in this extreme oversold level, which we did back we did this back as the markets were moving lower in April.
Yes.
That's what this data point right here is. And we got back to minus 250. And I was telling subscribers, so I do produce a newsletter called Mastering Probability, and just sharing with subscribers, you got to, as bearish as everything seems right now, just simply the way that markets work is they have to work off those oversold conditions, which just means you're really looking to get short, so you want to sell into that rally. Would be, so that's why I'm saying right now that no, now would not be the time when I would suggest going short a market. And look, you can get more oversold than we are, so I'm not saying that. I'm just saying it's really not the optimum time to do that. Now, in the case of the S&P 500, if we take a look at its charts out here, it also has one of those 9-count tops that has not been taken out. And this green line out here, green and red line, it's referred to as the oscillator unchanged line. I won't go into mathematics about that, but if people, subscribe to Mastering Probability, there's a workshop that goes exactly through those details out there. And when price is below that green line, it tells us that momentum is basically waned. So we've lost momentum. It's still in a bullish condition because when that line is green, markets are bullish. When the line is red, but also where is price trading in relationship to that? Because I can show you a green line here, and this is the S&P, so the last major top that formed out here, just to, again, describe the different patterns that I use that help identify tops. When markets get stretched, which it was doing here, and that's in essence what these black diagonal lines show us out here. And as they're getting stretched, the question is, and this is utilizing a relative strength indicator tool as well. When they get stretched like that, if price hasn't taken out the prior high, that can be an indication of about a change in trend that's about to take place. How does Stevie measure that change in trend? I wait for buyers and sellers that report for work every day at 9:30 to generate a bullish or bearish reversal candle. To me, bullish and bearish reversal candles are really great, but where they're awesome is at the end or beginning of a pattern out there. That's where, for me, they communicate the most. It does not mean that the patterns don't fail, but what you're looking for is an edge. And when that pattern is present, that's really what provides us with an edge. It's almost like stealing signals, if you're a baseball player, right? But even if you know it's a fastball that's coming, that doesn't mean you're going to hit it.
Oh, you're talking my language. I always when I was working with baseball players and we would show tools that would help them identify those very things, doesn't mean you can hit the fastball or hit the curveball or hit the changeup, right? You could know what a pitcher's going to throw. You still have to hit it, even though if you know what it is, right?
Yeah. It's like a golfer. It's like I was watching, I don't know, I love golf. I love playing golf when my back is good. I really enjoy it. When my back is bad, I hate it. And so I was watching the college. NCAA is on. Today is the finals. So I was watching them the last couple of days out here. And, I watched, it's just a 12-inch putt, right? And these are good players. I mean, these are good young players out there. But guess what? And they know exactly what the break is, but they still miss those putts. Yep. Right? So you should make these patterns. So in this case here, this was a Rhodes momentum indicator signal that was confirmed. This was back on April Fool's Day, April 1st, was that bearish engulfing candle. And for me, that confirmed the price was below that oscillator unchanged line. So we had lost some momentum. And that was an indication that we should head lower out there. There's another pattern that I use. It's called the A to B equals CD pattern out here. Mm-hmm. And that's was brought to us by H.M. Gartley is really the first one. That was back in the 1920s that he developed that. Here I've got, I'm going to take a look at the semiconductor index, because one of the reasons that the markets aren't really moving substantially lower is because of the semiconductor index. In other words, I don't think that the markets are going to, if the markets are going to top, I don't think they're going to really top until we see both the NASDAQ and the semiconductor generated topping pattern or topping signal. Now, right now, what I'm waiting for, in this case here, this is an A to B equals CD pattern. So what you're identifying is the lowest low. Now, you can go back further. I'm just referring to the current makeup of the market after forming a Rhodes momentum indicator top back on March the 8th. This is the semis out there. That was a pattern we just took a look at for the S&P 500. It goes ahead, moves lower. And in this case here, now we've started to move up. And this negated, by the way, it's 9-count top. So here's an example where a 9-count top failed. And typically when they fail, it tells us about a strong upward momentum move in this case here. And that's still what I would say. However, you've got this A to B equals CD pattern. What it waits for also to complete is a bearish reversal candle. So even though price is trading below yesterday's close inside the semiconductor, that is not a bearish reversal candle. So I still don't have a top inside of the semiconductor index. And the mere fact that price is trading above that green oscillator and change line, which is at 5130, this says we still have a rising price oscillator above zero. So the semis still haven't failed. Now I do have one other topping pattern. So just to kind of clear the Steve Rhodes mastering probability top and bottom patterns out here, I also do a series of wave counts. And the wave count, you just start, again, we'll start back here on April the 19th out there. And what you do is you wait for the, you mark, you keep taking a look. Every day that the market makes a higher high, you move a letter over. So you're going to go A, B, C, D, E, F, and G, which would be wave number 7. So back to your baseball, that would be what Stevie calls the 7th inning stretch out there. And you're looking for the 7th inning stretch to form. So here you got this A that formed on April 30th. Price gets above that again on May the 6th, but that wasn't the highest high. The next day becomes the B because on the following day, on April 8th, that was a lower high out there. So that was B. So when you get to wave number 7, that's letter G, our 7th inning stretch, that can be a top. So even though I don't have the A to B equals CD pattern for the semis, what I do have, it appears, doesn't look like we're going to take out yesterday's high, we do have a 7th wave top. Now, my experience, whether you form a top or a bottom, this is where that oscillator and change line really comes into handy, is that becomes the first level or target, either to the upside or the downside. We're talking about a top now. So I would still expect or anticipate that the semis could easily pull back towards that 5130 level. Now, the oscillator and change line, it's based upon price, so it's going to change as price moves up and down. So I just ask people to use 5130 as a guideline. It's shown in my newsletter each day. In fact, I'll give a little gift to folks out here. And I was trying to so what's interesting to me, we talked about, we're in like an oversold condition inside the general markets. Yeah, we take the S&P 500, we're really not that far off the highs, right? We haven't had much of a move. The NDX 100, we haven't had much of a move. It's just been sideways. The semis, we were at new all-time highs yesterday out there. How can the market, somebody should ask that question. How can the market be in an oversold condition when these other instruments are at the highs? And the answer to that question, I can show it to folks this way, which is to take a look at the equal weighted version of an index. So this is the NDX 100 as an example. And the very right-hand panel is the QQEW. This is the equal weight. And here next to that is the Qs. So if we take a look at which one has held up the best so far, it's the Qs. Which one has failed so far, is trading lower? It's clearly the equal weighted. So in this case here, what this is telling you and I, it's not that top sector yet. It's not the heavily weighted instruments that are pulling markets lower. It's the rest of the market. That's how we are getting these oversold conditions, because I have that same pattern set up. Again, the S&P 500 hasn't done much. If we take a look, we're not that far off the highs, but look at the equal weighted version. It's called RSP. It's a ETF that everybody can trade. In this case here, I did have a 9-count top, like the entire S&P, whatever derivative I use, whether it's the cash index, whether it's the equity future contract, whether it's the ETF, the SPY, or the equal weighted out here. So they all have tops, but the one that's really the weakness out here is that equal weighted. And again, so that just is how we get to, it's a great question. How can markets be that oversold when you just really take a look at those indices out here? It's because of the underlying instruments, and the equal weighted ETF really is helpful to help us understand what's really going on in the markets. But that little gift, and I just want to put this up on the screen for folks, and most people have screen capture tools out there, and so they can grab this. And this is showing, in essence, the top 10 instruments. If you take a look at the Dow, so I start off with the Dow, and it's got the top 10 instruments, which make up 57% of the weighting. So knowing what those are doing, and here I show through the tools that I use, I convert each of those to take a look at different time frames to let us know whether something is bullish or bearish, or what version of bullish or bearish, or if we're seeing a change of trend, bull over, bear over, and so forth. So I have the top 10 for the Dow, top 10 for the S&P, but because in the case of NinjaTrader, as you know, with regard to a market analyst, I can't put the same symbol in here twice. So when I take a look at the S&P 500, this is the top 10 without Microsoft. So you'd have to just go up top to find the Microsoft chart to see what it's doing. So when I get to the NDX 100, because I started off with the Dow and the S&P, I've only really got 3 symbols left.
Right.
Tesla
Right.
as an example, Apple, Microsoft, so they're up top. But what this does is at least gives you what the position is for the daily time frame, the weekly time frame, the monthly time frame out here. And then what it does is it tells us whether or not we've got I refer to Rhodes momentum indicator top. So it shows us what instruments have either a top or bottom pattern or signal. And then also I use that 9 count pattern. So it shows us exactly where we're at. In this case here, it shows us exactly where we're at as of yesterday's close. So I'm not changing these symbols right now to identify a potential new count or anything, but the support level. So I've got the oscillator and change line. This is why people should just grab this screen, because if they're trying to understand their trading instrument is price above support or below support, this would be a column that they could take a look at. If the arrow is up, then then the resistance is up above us. If the arrow was to the downside, resistance would be below us and support and so forth. And then I've got these task market profiles, which I use to assist in understanding whether an instrument is bullish or bearish or where support and resistance is. So Tom, I put this together for all of your viewers out there. Figured they could just simply take a snapshot on it, and then they would understand what the top weighted instruments inside either the semis, the Russell, the NDX 100, the Dow, and the S&P 500. And it's really helpful. I think it's very helpful.
So that's great. So there's a lot there, Steve. We've
Yes.
got a little bit of time left. I want to unpack a little bit of this. So this goes back to that market breadth idea of, which components of the indices are doing well and how they're doing, right? So when we're talking about weighted indices, you want to look at the top weights because they're really what's holding the market up or down, depending on what's happening.
Yeah, like the Mag 7, if people even still talk about that, I don't know.
Exactly. You get to an index like the Russell 2000 or more like the S&P, 500 stocks rounded, give or take. It's only a handful that really that move the market, right? Because
the top 10 in the S&P, this is a really amazing statistic. Most people don't know it. Represents 34% of the weighting.
Right.
10.
Exactly.
10. That says the other 490, and there's actually 504 instruments in the S&P right now, are the ones that make up the other 60%.
The unweighted or equal weighted, I should
Yes.
say. Going back to NASDAQ, I noticed, when you showed that equal weighted chart, you also had an island reversal, right? So it's kind of like, right up there.
Yes. Today you would, yes, absolutely.
Today, because of today's gap down, it's kind of like it's almost like filling the gap and then some. It's super, super bearish, I think, when you get an island reversal like that. Not only do you fill the gap, you fill it so hard that it makes a new gap. So
and especially at all-time highs, right? So that pattern configuration has more meaning at all-time highs, than maybe in the middle of a move.
Exactly. Now, one thing, Steve, Mike and I and Jim have been talking about the poor performance of the Dow, right? We can explain the Russell due to interest rates. We can explain NASDAQ due to semiconductors or, chip make NVIDIA, that kind of thing, NVIDIA earnings. But the Dow has been a little bit of a laggard. The question is what's driving that? Why is the Dow lagging the other stock index futures? Is there something that you have insight on here?
Well, I would say so. When I take a look at the different indices, I consider the Dow. How I use the Dow is the tool that's used globally. It's large cap. So if you're an international fund, you're going to be investing in large cap stocks. So the Dow is really kind of a good international component. Yes, it's the top 30 U.S. stocks by market cap, all that type of stuff. But to me, the way I take a look at the Dow, so this is an indication to me that right now you've got large capital that is flowing out of the Dow. Where I consider the S&P 500 to be really U.S. centric. What's going on inside the U.S. market, and the NASDAQ is more for like us retailers, so to speak. Okay, it's more of a retail type of an index out there. And the Russell 2000 is a whole nother world of its own out there. So I think this is just now my inclination is that it would be nice to get a big move lower. out here,
Okay.
because it would just really shake out the weekends, and people would be you'd be hearing all kinds of things like, we're in a new major bear market, and I don't think that's the case. But I'll just take things one step at a time. And so my answer to your question, I look at the Dow as being more of an international type indice out there, because the people that have money that's being managed by wealth portfolios, everyone is slightly different, but you've got a mix between U.S. stocks, international stocks out there. The same thing if you're in Europe and you're using the money manager, right? They've got weighting for local, or their current stocks, and some for the Dow. So I really think of the Dow as more of an international piece. I don't know if that's the right explanation, but it's the Stevie explanation.
What's interesting too, Stephen, just maybe one more point before we wrap up, is that equal weighted chart looks very similar to the regular futures,
It does.
to the regular index. Seems to me that maybe the Dow as a whole is more equally weighted with, kind of in general by its construction, rather than having 10 stocks be a third of the index like the S&P.
Sure. Sure. Well, the interesting thing here, and I'm glad that you pointed it out, so thank you for doing that, is that when we take a look at these four charts here, the equal weighted has still not made its way all the way back to the breakout level. So actually, the equal weighted here is a bit stronger, right, than the weighted version. Doesn't mean we're not going to get down there, and it's not like we're talking huge, a huge variance, so to speak.
Right.
But it still hasn't gotten back there. So it kind of interesting. But folks can utilize these numbers, the 35,584 in the equity future contract, the 38,518 in the cash index, the diamonds, it's 385.06. And those are really critical levels, because there's no bottom signal or anything as we're getting back to a breakout level of support. But sometimes a bottom takes place when we get to that breakout area.
Awesome. Steve, thanks so much for joining us again. Where can people find you? What's the best place?
Yeah, they can go to masteringprobability.com, and they can, again, if they would like to use these tools, understand these tools, if they sign up at masteringprobability.com, they've got a 30-day free trial, and during that 30 days, they have access to like 9-10 hours worth of videos that explain this, and then they get 2 newsletters a day, and sometimes they send out daily updates out there. So that's how they would get in touch with me. And,
that's great.
Tom, it's always great to be with you. I love it, even though I kind of hogged one side of the conversation. Sorry for doing that.
That's okay. We had a limited time, and it's great to talk to you, Steve, as always. And we'll do this again. Appreciate you coming on here, as I'm sure our guests do.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.